All right, so let's just go over some markets. ES, there is the breakout. There's the test of the breakout, rally, breakout again, fall through, some fall through, not a lot. Pulls back to test the high. We'll see if it can go and test a little bit lower. This high here, I think on 11.7. We'll see if it pulls back a little more to test the other high. It's already tested the high of 1031, and it's holding. But I think there's a good chance that it breaks down a little bit and tests the high on 11.7. So far, 2% pullback in 2 days. 2 days plus. The rest is just a little bit of sideways action. The bonds, clean breakout right over here with follow through, very important. And I mean, chances are that you definitely want to observe it as it tests the breakout, because 7% move in 7 days, that's a pretty big move, and it has good thrust and good breakout. Definitely want to see how it pulls back to test. This one here has a breakdown or breakout to the downside in Bitcoin. It is not good because it has a breakdown and it had a fall through bar, and it has a very weak. Take a look at this. Look at the way it bounced back. Descending. Not good. The dollar over here, you have a clean breakdown and follow through. Again, follow through is what validates the breakdown. If a breakout or breakdown doesn't have follow through and it has a shortening of the thrust from wave to wave, chances are that it's going to pull back hard, or it may be a false breakout. So anytime you have a breakout signal, you must have follow through, because follow through validates the breakout or breakdown as a continuation signal. If you don't have that, it could be there's all of the weird possibilities. One of being that it's climactic. If that's the case, the breakout. I'll give you an example right here on oil. So on oil, what do you notice? You have a breakout right here, expansion and thrust, breaks out above this high. Does it have follow through? No. What happens? Takes out the low. Right there. Even on the downside, when it had a breakdown, does it have follow through? Barely any, one bar down, and has a shortening of the thrust. What happens? Reversal. What happens? Right here again, breakdown, attempt to take out the low. Barely anything, just one bar, and reversal takes out the high. So anytime you have shortening of the thrust, your stops are in jeopardy if they're above, if they're just beyond the immediate next swing high or low, because when you have shortening of thrust, that increases the probability that there's going to be a spring or an upthrust. And if you have a breakdown bar, you must have follow through. If you do not wait for follow through and it does not go, what happens is it upthrusts, which is the case right here. You take a look at what happened here, breakdown here. What happens? Lack of follow through. What happens? See what happens? Upthrust. Here again. Here is a very clean one. Breakdown. Can't do it. Upthrusted both these highs. Here you have another breakout. Doesn't have follow through. What happens? Takes out the low. So this typically happens in range bound markets. They always have this type of behavior. So that's why you want to make sure the market is trending, and the only way to do that is after the breakout or breakdown, there has to be follow through. Follow through is a behavior. It is a behavior, it's just as important as the breakout. Follow through is just as important as breakout. And here you see on gold, breakout, pop, follow through to a higher high. Very important, because this is all the follow through and the higher high that shows strength and speed of the move validates the breakout or breakdown as a continuation signal. Again, follow through is what validates the breakout as a continuation signal. Without it, the breakout can actually be a climax. That's right, the breakout could be a climax because it doesn't have follow through, and it could become ending action, subject to either reversal or a spring and upthrust in the other direction. All right, we're done with this. So what's the point? The point is, for gold, watch the pullback on gold. As this is pulling back, you should be watching the 30-minute chart and waves on the 30-minute chart looking for climactic action, and a point and figure that after the climactic action shows sideways movement and reaccumulation. And the same thing holds true for this, but on the bearish side, meaning on the dollar you have a breakdown, you have fall through, it can easily come back, test, and on the lower time frame show a buying climax, because the wave would look like a trend on a lower time frame. So wait for that climactic action or exhaustion, indication of exhaustion, followed by sideways action and a reversal here against this breakdown bar on the dollar, or on the bullish side on the euro. Bitcoin, I just stay away. The bonds, yes, definitely want to see how it reacts when it tests this bar. It's very clear. I mean, look at the size of this. This is not a random bar. There's no randomness here. When you have breakout, follow through, biggest wave, and multiple waves, this is a possible change of behavior, and definitely want to see how this market acts when it goes to the lows here on 11, and if it springs that area, springs it, exhausts, moves sideways, reaccumulate, and boom, go. Definitely want to see all that. So, long story short, on the ES and stock market, we want to see a slightly lower price action to test and reaccumulation there. Same thing on gold and the same thing on the euro. So bonds, ES, gold, and euro want to see that pullback action, and I need to examine it on the 30-minute chart. I might actually show how to do that, to show you exactly how it is that you get in on the lower time frames, which is very difficult to do. That's why most folks, they don't deal with that. What they want to do is draw Fibonacci and just buy at a certain level, and it goes to the golden ratio or whatever. But if you want to maximize your reward relative to the risk, you can't do that. You have to, if you want to minimize risk, you must go to the low time frames. And if you want a massive reward to risk ratio, you have to go to lower time frames. It's just the skill and the ability to do that and time it perfectly is much harder than buying it at 6.68% retracement. And it's this Bitcoin over here, this is so weird. It looks really bad, and on this day, I think this is 11/21 today, it actually took out 1, 2, 3, 4 days on increasing thrust. So you be really careful with this. I don't even know what target it is, but I'll tell you this is a pretty big range, and the way it broke down came from a breakout. This is your false breakout, and a lot of folks are looking at this low spring, up, test of spring, attempted rally, takes out 1, 2, 3, 4 highs, pulls back in an effort-filled move, 1, 2, 3, 4, 5, right, holding above the prior wave high, and then break on increasing thrust. So it was positioned to take out some of these highs up here. I mean, because you have the cause, you have the spring, you have the rejection, you have the test, you have the break, you have the sideways action, almost looking like absorption, and then you have this attempt to go higher. So, I mean, talk about a manipulative campaign. When a breakdown comes right after a breakout, what is that telling you? It's saying that I think this is like campaign, because this is non-coincidental. Like, it gives you all bullish indications, holding, and all of that, and then reverses like that. I'm not saying it was bullish, but this sideways movement shows a rejection of the rejection of the attempt to go lower on a very big bar, biggest in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, almost 20 bars. It's the biggest in the month. With a high-end close, and the pullbacks look effortful, which is a bullish. And right when it breaks out, people are going to want to get in for the ride up. And look what happened. Wow. All right. All right, that's all, folks. Have a good night. Bye.